Kumar Jain, the Chairman and Managing Director of Gulshan Polyols, is joining us today. So, sir, firstly to start off with, of late the business, if you could just give us an idea of late how the business has been going on for Gulshan Polyol currently.
Thank you, Mr. Sarkar and Anushri, calling me on your NDTV, and thanks to all your viewers. The Gulshan Polyol has delivered what it promised earlier. It has promised 2,000 crores top line, and today we have closed our financial year 24-25 by 2,000 crores. All our commitment towards the capex and setting up 750 crore liter plants has in Madhya Pradesh and Assam has been fulfilled. So, but during last 2 years, due to the sudden overnight demand or overnight growth of ethanol industry, the raw material supplies were under challenge. So which led into the profit margins. I'm sure going forward, top line is gained, our bottom line will also be gained.
Right.
About the grain relief, I would like to tell you that the government has also felt this shortage a little bit. So they released FCI rice as a fixed price, which has softened the raw material prices. So that is a very good step from the government and to make up the ethanol as well. So that is our key point now. Ethanol is about 60% of our turnover at the moment.
Right, sir. So, as you were mentioning that overnight the demand for ethanol has increased substantially. So, any revenue targets that you could share for FY26, FY25? You did a 1,200 crore of top line. Any revenue targets for FY26 that you could share with us, sir?
Yeah, at the moment we are doing 20 crore liter, but in 25-26 we may be touching 2,400, 2,500 positively. We'll be doing 24 crore liters of ethanol, plus all our products like mineral and like grain processing will also work better.
Okay, and
Yes, please.
yeah, and in terms of margins also, you were factoring in 2-3 factors which had led to some bit of that pressure. Considering that, what's the outlook for FY26 that we can expect? Is there an improvement that we'll see in the margins?
Yes, we'll be seeing the improvement in the margin, definitely. We have targeted 8 to 9% EBITDA. But let us see where do we reach. But I'm sure we'll be nearby that.
What would be the factors that would lead to this uptick in margins? Because if you look at the FY25 numbers, it's relatively at 5% of what we are seeing. So can you talk to us about that as well?
Yeah, as I said to you, this major cost has been the raw materials, grain. So development of ethanol has scarce the raw material, which is grain for our grain processing as well as ethanol. So which has shrunk the margins in 24-25. But after release of this FCI rice, I hope it will be released. It will be softer now, and we are facing with these 3 months of this FY 25-26. We are seeing that their softening is happening.
Right, sir. And any capital expenditure plans that you have going forward?
Yes, there will be a very capital expenditure in future. We have already on way of acquiring 100-acre lands from Madhya Pradesh government. And as you know, the USP of the GAPL had always been identifying the import substitution at the right time. In 1980, we identified precipitated calcium carbonate. Then in 2000, we identified on-site PCC plants. So all those import substitutes, then sorbitol in 1996, then ethanol now is also an import substitution. So we are looking for those projects which are niche and which are shortage in the market. So we are identifying them, we are taking land, and capex will be done once we are we are eased with the funds, we are eased with the operations of existing operations. As far as running capex is concerned, that will always continue. There will be debottlenecking continuing. There will be some addition of equipments will be continuing. That will continue in the existing plants.
Okay, and sir, you were just mentioning about sorbitol exports also. Just want to understand your strategy in terms of how the international markets are going to be. Can you talk to us about the pricing over there and other factors that we should be watching out for?
Yeah, we are exporting sorbitol in 40 countries, and it is ranging 120 crore rupees per annum. It is having some growth, nominal growth is taking place, but the problem is the price pressure from China. You see, if I would like to tell you that for last 2 years, China had not been exporting all these products, starch, liquid glucose, sorbitol. Their government has banned that for last 2 years, but now they have opened, which has put some pressure on the export markets. But still, nevertheless, we are pulling on, and we are continue to pull on. These are the cycle of industry. So these cycles will continue and will be comfortable in near future.
Right, sir. Also, if you could give us some understanding, how would this impact, given the fact that the reserve price of rice is likely to rise to around 2,320 rupees per quintal from 2,250. So, what would be the impact here coming on Gulshan Polyols here?
Yeah, we are expecting the OMC will increase the corresponding price of ethanol as well. We are expecting less. We have our association which has represented that, and some assurance are there, but nothing, unless it is in our hand, they are saying they will take it up in our costing.
Right,
So
sir.
they will increase the prices corresponding. That is what we are assured.
But if there is no, if OMCs do not increase the prices, then what would be the margin impact? If you could give us any color on that front.
If they don't give any margin, then it will be swap only. No, it won't be much beneficial. But being FCI in the market, other raw material will be softened. Other raw material will be softened, and that will give the margin, and they are giving the margins.
Okay, so that's
FCI is hardly 20% of the total requirement. It is not sufficient, but that 20% is making the entire grain market soft.
okay. So that's the outlook that we are seeing on that front. But just also want to understand the demand environment across your end user industries that we are looking at. This pertains to pharma, FMCG, and paper. Any kind of challenges that you're seeing over here?
Yeah, challenge is always there. Challenge in the B2B segment is always of the overcapacity. There's a overcapacity everywhere. Actually, what happened ki China closed the export for 2-3 years. Then we all expanded in India and exported to all Malaysia, Indonesia, and all other countries. But now China is again coming to the market. So these are the impacts of this sometimes. It is not a permanent impact. These are the impacts. Sometime it will continue and it will be taken care of in due course of time. Our production, our consumption will grow, and it is growing. Toothpaste is growing around 5 to 6%, and other things are also growing. As we'll make it up within few times.
So that's what we are seeing in terms of how the demand is across the user industries. But lastly, coming to the target that you've given for the revenue, 2,300 to 2,400 crore is the expectation from the current FY25 levels. So there's a ramp up that we are looking at over here. Just wanted to understand, is it on the capacity additions? How would we see an improvement in terms of where the utilization levels are currently?
It will be purely on the utilization and optimization of the operations. It won't be any new capex, and we don't require that for hitting 2,500 crores. So there will no new capex for this. New capex will give another additionals, but not required for this year, any capex.
Okay, so that's the overall picture that we are seeing for Gulshan Polyols. So that keep that stock on your radar. Thank you so much for joining, sir.
Thank you.
And that was
Thank
the
you.
overall picture that we are seeing for this. But moving on, India may be inching closer to green lighting select joint ventures with Chinese partners in strategic sectors like electronics, renewables, and infrastructures. Now, sources indicate that 6 to 7 proposals are under active review with technology transfer and India control emerging as key conditions. My colleague Shimi joins in with more detailed analysis on this.